You have now learned the concepts of the nature of insurance, risk, perils, and hazards. Let's review some of the key areas from this section that will help you prepare to pass. Nature of insurance. We are exposed to many perils. The purpose of insurance is to provide financial protection against losses that may be incurred due to a chance happening or event such as death, illness, or accident. This protection is provided through an insurance policy, which is a simple device for accumulating funds to meet these uncertain losses. Law of large numbers. Insurance is based on the sharing of risk amongst a large pool of people. The law of large numbers states that the larger the number of people, the more predictable the actual losses will be. Insurance companies use this data to calculate rates. These principles form the foundation upon which insurance is based and allow for its successful operation. Speculative risk. Speculative risk involves the opportunity for either a loss or gain. Speculative risk is not covered by insurance companies. Pure risk. Pure risk is a situation that can only result in a loss. There is no opportunity for financial gain. Pure risk is the only type of risk that is insurable. There are 5 ways of handling risk. Avoidance, which is simply avoiding as many risks as possible. By choosing not to drive, you could avoid a possible car accident. By never flying, you could eliminate the risk of being in an airplane crash. Risk avoidance is effective, but not always practical. Reduction. Since we cannot avoid risk entirely, we often attempt to lessen the possibility of a loss by taking action to reduce the risk. Installing a smoke alarm in a home will not lessen the possibility of a fire, but it may reduce the risk of loss from a fire. Sharing. Sharing is when a group of individuals or businesses with similar exposures share the losses that occur within that group. A reciprocal insurance exchange is a formal risk-sharing arrangement. Retention, also known as self-insurance, is when individuals have the financial ability to fund losses by themselves when they occur. Transfer. Transfer is the most effective way to handle risk. The risk is transferred to another party. Insurance is the most common method of transferring risk from an individual or group to an insurance company. Though the purchase of insurance will not eliminate the risk of death or illness, it relieves the insured of the financial losses caused by risk. Elements of insurable risk. Not all risk is insurable. As mentioned earlier, insurance companies will insure only pure risk. Furthermore, even some pure risk must have certain characteristics in order to be insurable. The risk must be due to chance. It cannot be catastrophic and must be randomly selected. Fully understanding these key topics are essential as you prepare to pass.